Hey everyone! With the first rays of sun, it feels like crypto winter might finally be thawing. Even with geopolitics still tense, Bitcoin has held up really well above the 74,000 mark. We're now heading into week 3 of the Iran war, with oil prices climbing and, of course, inflation worries rising too. Still, crypto's looking pretty upbeat. Are these the first signs of a rally? And what could come next? I'll talk about that over the next few minutes with Oliver Michel from Tokentus. Great to have you here, Oliver.
Hi.
Bottom line, none of the facts have really changed. We still have the war scenario in the Middle East. Oil prices are rising. Inflation fears are real. We've got key rate meetings coming up this week. And yet, Bitcoin's held up well, not just the last few days, but basically all week. How does that fit together?
Johanna, it's not just Bitcoin, it's the altcoins too. Ethereum, one of the top coins right behind Bitcoin, has had an awesome run, a real wake-up call for the big altcoins. And even some second-tier coins are popping. It's bringing back those good old altcoin season vibes, up 60, 70, 80% in 7 or 8 days. So yeah, not just Bitcoin, the altcoins have shown real strength. And that's what we want to dig into today.
But first, this is basically the week of the rate meetings. The ECB is meeting too, probably nothing huge, but the Fed as well. And of course, we've been watching how the economic data has been coming in. Even if you could say it points to rate cuts, there's probably nothing happening this week. More like it'll show up in the statement afterward, right?
Yeah, we'll see. We'll talk about possible surprises in a second. But overall, it looks like this. We said it here last week too. The oil price is the hub. Everything's turning around. If it goes up, everyone tenses up. If it drops, everyone relaxes again. And you can see it in the oil price. It feeds inflation across the board. And harder inflation definitely doesn't mean rate cuts. If anything, it's higher for longer, and you can see that here too. You actually have to watch out that rates don't get hiked. Basically, the market's only pricing in one cut this year, and even that isn't expected until 2026. Otherwise, you can assume nothing happens for now, mainly because of the inflation risk. The numbers we got last Wednesday and last Friday, CPI and PCE, were pretty unremarkable, pretty moderate. You can see it here, CPI 2.4, 2.4, 2.4, previous, expected, and what actually came in. And in core, so CPI without food and energy, it's a tiny bit higher. The CPI numbers come from the BLS, the Bureau of Labor Statistics, or that's part of the Labor Department. And then, unlike CPI, we've got PCE inflation, which came out Friday. That was also around 2.9. And on core, at about 3.03. You're obviously still a long way from the 2% target. The Bureau of Economic Analysis, that's under the Commerce Department, so a different shop. The difference is CPI tracks a fixed basket of goods, while PCE is a lot more flexible and a lot broader. And that's what the Fed watches core PCE, and you can see it's still far from 2%. Trueflation has also moved up versus last week. As of last night, we're at 1.52%. So yeah, those inflation fears stoked by oil prices in connection with the Iran conflict are still kind of there. And that obviously takes the wind out of any hope that rates get cut in some way to get the economy going again. And
you can see it's needed when you look at the other numbers. Like you said, inflation fears are real, so they're not going to cut rates if inflation keeps climbing. But there's also the other side of the equation, and that's growth. GDP came in awful. We even wrote about it on Crypto Insights, on our crypto channel. If you look at Q4 last year, back in Q3 2025, people were still celebrating. GDP was up 4.4%. Then the first reading showed Q4 was anything but pretty, 1.4%, after 4.4%. And the second reading cut that in half again. So GDP only grew 0.7%, which is basically nothing, and it points to exactly what you were just saying. But on the flip side, that could be what pushes them to do something with rates, just maybe not under Jerome Powell.
Yeah, this year, Johanna, like you said, this is
A catastrophe.
a disaster. And maybe that's the reason the Fed finally bites the bullet and does something.
We'll definitely see. This week, like I said, rate meetings are scheduled and we'll get the decision tomorrow, Wednesday, with the press conference. Plus tomorrow we're also getting February PPI and we'll be watching that too to see how things develop overall, especially now that it's getting tough. Let's keep going and look at what's really broken right now. If we set the Trump bashing aside for a second and just look at the agenda, Trump wanted to be a peace president. He wanted to get inflation down, actually take pressure off people, wanted to actually push the economy up, stabilize the markets, and ideally do it all before the midterms. But he's got a few fires to put out, right?
Yeah, like you said, what's happening in the US right now, I'd sum up as everything's moving in the wrong direction. On top of the fact that Republicans these days on poly market, the odds of them winning enough Senate seats to keep the majority are already below 50%. And that should have every alarm bell going off. And the takeaway from this slide is they've got to turn the ship around because it's heading the wrong way. You said it. The US government actually wanted a weaker dollar. Weaker dollar means US products get cheaper and can be exported more. That's supposed to shrink the trade deficit. But the dollar keeps climbing because of the Iran conflict and the rush for liquidity. He wanted lower rates, cheap money, so companies can borrow, invest, and keep things moving. But what happens? War, oil prices, inflation risk, like we said, and rates definitely aren't getting cut anytime soon if this keeps up. He wanted strong growth, the strongest US growth ever.
0.7.
It's always the same. We're the biggest, we're the best, and we're going to crush it. And what do we get? 0.7 in a quarter. Then he wanted to bring in big tariff revenue. He wanted to use those tariffs to make sure everything, that the tax gets scrapped and the debt gets paid down. And what happens? The Supreme Court says no, that's not how it works. Then he wanted to cut the national debt with tariff money, and also with this Bitcoin reserve he wants to build and hold for years, so it's worth enough to cover the debt. And what happens? The debt pile just keeps getting bigger. Just the military spending tied to the Iran conflict is $1 billion a day. So this pile, already at a record high, keeps getting bigger. Elon Musk was supposed to help cut it, but he clearly realized it won't work with this administration, and he left. And in the end, like we keep saying, at some point the dominoes start falling. People are maxed out. Gas is expensive, inflation's climbing, they're drowning in debt, and eventually they stop paying back loans. The small banks go first, then the bigger banks, and that's how the chain reaction starts. So there's zero sign of real relief. It's the opposite, and it's heading the wrong way. If he still wants to move the needle and win the midterms, they've got to yank the wheel hard, and not just the US government, the Fed too. Yeah, that's part of this whole thing. Like if Donald Trump got up tomorrow and said, we scored a massive genius win in Iran and the war's over, or if Jerome Powell got up tomorrow and said, given the economy, we're cutting rates by 50 basis points. Those are the kinds of things that would make you say, okay, we can still turn this around. But if it keeps going like it has in the wrong direction, then he's basically got 2 quiet years ahead because he won't be able to move anything anymore. So Johanna, the key point is something has to change. And what I can do is give it that momentum, that push, like we'll see in a second, for the big US indices and the stocks behind them toward a final top. And of course for our crypto too, without that turnaround, we're going straight down.
Let's look at this on the big US indexes, the Dow, the S&P 500, and the Nasdaq. Obviously, we've seen the market bounce hard. The major indexes were basically back up near record highs. So with the current market setup and the geopolitical situation, a pullback isn't exactly shocking. You said recently you wouldn't mind if this took a bit longer, so crypto has time to catch up if the correction keeps going for a while. Or do you think this pullback has basically run its course?
Yeah, like you said, we were kind of hoping for a correction, and we got it with the Iran conflict. We'll pull up the chart in a second and you'll see where it kicked in. And of course it's tied to that disastrous Q4 GDP. You can see the move here. That was last Monday. The Dow still had a really nice green candle. Then the rest of the week was red. And yesterday things stabilized a bit again. So from the top, we're looking at about an 8% correction. That's fine. What matters for us is that the trend stays intact. We know the trend is higher highs and higher lows. So this is the latest higher low, and you don't want to break below that. And every correction has something good about it. It lets the market catch its breath and then push higher again. But there's also the risk of printing a lower low, which we know from Bitcoin, and that would mean a trend reversal. You can see the correction really clearly here, but even with 8% or 5.5% or the Nasdaq down 7%, we're still within striking distance of what we actually want, which is making a run at those final all-time highs. After a correction like this, a move back up is definitely possible. And like we said on the previous slide, that push higher has to be fueled by whatever measures now need to come from the US government and the Fed, and last but not least, the Nasdaq. We've been saying for weeks this right here is the last higher low, and it'd be great if we corrected back into this zone. And yeah, that step by step, the Nasdaq has basically done that. Maybe it dips a tiny bit more, but that would pretty much be the spot where you say, okay, we've printed the next higher low, and then we go up. And while these three have been taking their time to correct, at least Bitcoin has had the last week and a half to catch up a little. So what kind of floor can the US indices create for crypto? That question's still out there. And by floor, we mean pulling liquidity into the market. And how much time do cryptos have to catch up? And with every day we keep seeing a slight pullback here, we've got a chance for crypto to make up some ground.
Oliver, like you said earlier, moves like this usually show up even more in the Russell, especially with all the geopolitics and oil prices jumping. The pullback's been a lot sharper there. Is 12% it, or is there still more downside pressure?
Yeah, 12% is a lot more than the Nasdaq's 7, the S&P's 5.5, and the Dow's 8. If you look at the big US indexes, you can see the small caps in the Russell react way more sensitively to what's going on right now. Whether it stays at 12%, we'll have to see. We know this is the last higher low. And basically that's the range we're looking at. but I can definitely see it topping out around this 12% peak and holding here. What you can see really clearly here, and you mentioned it on the previous slide too, is that this pullback was also driven by the Iran conflict. You can see it especially well in the Russell. This line here marks the start of the Iran conflict, and before that we had a nice symmetrical wedge. Price came up into it from below, and normally when it pushes in like that from underneath, odds are pretty good you get a continuation. And when it kicked off, it basically headed lower. That's actually fine, because we'd been wanting a correction here too. As long as the trend of higher lows and higher highs stays intact, that's totally okay. So the odds are pretty good. We base here, turn back up, and hit our 2,800 point target.
We're also tracking the DXY because the dollar's obviously gotten stronger. We'd already seen the DXY hit our target zone, and after that it pushed higher. Sure, oil's up, the Iran war, and the dollar's catching a bid. What are you expecting here?
Yeah, the DXY was already above 100.
Yeah.
You can see it right here. This is the daily chart too. The DXY eased off a bit yesterday. You can see it on the RSI. That's why I pulled it up. The RSI was basically pretty overbought, so it was clear we'd get a pullback, in this case to the downside. And we are seeing that. We saw it yesterday, and it'll probably keep going over the next few days if things calm down a bit. But still, the DXY is trending up, and it's competition. The dollar as an asset class is competing with our crypto. But I can totally see that from 96 to 100, maybe a bit higher. It's not as big a headwind as if it runs to 105 or 110.
You wrote in Crypto Insights this morning that you went into prep super motivated. Makes sense when you look at those green daily candles, and when you say stuff like that, you can kind of jinx it, because pretty quickly after 8 green candles, Bitcoin's daily candle flipped into the red. But hey, let's be fair. $74,000 is a level Bitcoin has taken back, and that does make a breakout at the top of the range possible, right?
Yeah, there's definitely a lot of hope in what you're saying. But if we keep things in perspective, here's where we're at. The drop from the all-time high last October down to the low is still the same. The low is still 60,000. And like we said, we're in a sideways move, a classic range, kind of drifting a bit higher. Overall, even with those 8 green days you mentioned, and even if we're headed for a red day now, we already touched 76,000 overnight, which is a good sign. Those blue arrows you pointed out are higher highs, sure, on a pretty small scale, but we are at least printing new highs again and again, still keeping our feet on the ground. We're basically still in this big bottoming zone. Even if we get a little push up here, it can still happen. It can still happen. What's on the table can still happen. A retest of 60,000 or the high 50s. That's all still possible. This move up is nice, but it's not strong or consistent enough to say we're out of the woods yet. You can start getting more optimistic once we're up around 80,000, or maybe even 90,000, once we've taken out that 100K weekly and start moving into the retracement area. If this is 0 and this is 1, then we're talking about 61.8%. 70% and 78% of that move from 0 to 1. And that's exactly why we keep talking about retracements, because that's where the chances of the move getting rejected are the highest. Those are the possible steps up. We keep sketching out. And only once we clear those retracements, once we're above that 786 level, then we can hope that it's not just a relief rally, but maybe a continuation rally that keeps pushing higher. But until then, Johanna, I just take it day by day. and say we're still in the area of a bottoming phase. And after a drop like this, I think it's fair to give it a few more days to build that base before we go higher, whether it's a relief rally or a continuation rally. Yeah, for sure. Moves like this are obviously being driven by solid spot Bitcoin ETF numbers. Last week, the spot Bitcoin ETFs had about $760 million in inflows. And what's especially wild is Saylor over at Strategy already added another 1.3 billion in Bitcoin the week before last. And last week he topped it again with $1.6 billion. And I think that's actually his biggest buy to date. So yeah, there are people and companies in this space accumulating in a big way. That's what this market's known for. And it's not just him either. If you look at the on-chain data, there's a whole bunch of that are accumulating in these zones, which we'll look at again at the end. But basically, the big theme here is bottoming out.
Let's also look at Bitcoin on the weekly chart. We just had 8 green daily candles, so it was a strong week. Yeah, okay, it's got a bit of a weird aftertaste now, but the weekly view helps you place it a lot better, like how...
Yeah, if we get 8 green weeks in a row, I think we're basically out of the woods. Right now, we're working on the 3rd green week. We had that inverted hammer the week before last, and last week we had that nice green candle.
Yeah.
The one you see here and today, Tuesday, together with yesterday, Monday, is green too. And of course, it'd be great to get a 3rd green candle in a row. So the bottoming process keeps steadily going until at some point we can say that was the lower low that got printed, and from there we move on. Pretty good odds, since we're always watching the RSI. And what we kept saying over and over was that was the absolute bottom. There's never been a lower low in Bitcoin's history, and there had to be a bounce. That bounce has started. You can see it clearly here, and if it keeps going, then we're right where we want to be, at least in a relief rally that could take us to around 105 to 110,000 bucks, maybe even higher. And all of that, I'll say it again, is against the backdrop of what we had earlier on slide 3. The US government and the Fed have to do something now. New liquidity has to come into the market. So yeah, they need to print money, and they definitely will. And we might also see a rotation out of other areas, out of the stock market, away from the big names into smaller caps and crypto, and of course out of gold and silver into our space. So yeah, what we're seeing here looks great, but I think the real push, the thing that could make the next few weeks green, is still ahead of us, that the real push is still coming, and I think we can look forward to it.
Let's look at the altcoins. We saw it. Bitcoin did well, but a few altcoins did even better. Now we've got Ethereum and XRP in there too. And unless number 2 really takes off, there won't be an altcoin rally, right?
Yeah, that's how it is. I mean, if it doesn't go first and clear the way, then the others still won't follow. We've been saying for 2 years now that Ethereum has to pave the way, and you could really see it yesterday. Bitcoin was up like 1.5, 2%, and Ethereum was up at times 8, 9, 10%. So yeah, attention on this. This coin keeps growing, demand keeps growing, and you can see it in the performance here. This is the weekly view for both ES and XRP. That 25% performance is clearly better than Bitcoin over the last 2 weeks. And the same goes for XRP. We're not quite at 25% here, but if you take the spike, then we'd be there. So yeah, that gives you some hope, and you can see where we're coming from. We were oversold here too. So it was obvious there had to be a bounce both here and here. We've seen that bounce now, and it was actually so interesting that you could say, yeah, the altcoins could now. And we've said it again and again, even on our crypto channel. When Bitcoin goes into a relief rally, it drags the altcoins along, but in a bigger way, performance-wise, than Bitcoin itself. And here with ES, we're back above 2,000 again. We've always said that's our range, and now we're slowly moving back into it. And yeah, you can see it with XRP too. It's making a nice move. We were at 1.60 this morning, but Johanna, I'll gladly say it again, especially on Bitcoin. If it tests 60 again, or the high 50s, then yeah, 2 nice weeks. But in the end, that story's over. Then we drop here too, and we're still looking at the 150 area. Basically that whole zone down to about $1, $1.10. That's the absolute worst case. If things go well, and we've already seen the lower low in Bitcoin, and it doesn't go back to test 60, but instead kicks off a relief rally, then we can expect, especially from the 2 biggest coins after Bitcoin, a really solid run, and a lot of people get paid back for the ride down we've had.
You also brought 2 more AI coins today. We already talked about them. On our Crypto Insights crypto channel, thaw and FET, what can they do, and where could this still go?
Yeah, I want to use this slide and the one before it to show it's not just Bitcoin doing what we're hoping for right now, meaning a relief rally, but our altcoins too. The big alts are outperforming Bitcoin, and some of the, let's say, second-tier alts are starting to do what you typically see in altcoin season, where you get a real burst within a week. And we've got 2 AI-related coins here, and this is what we've seen over the last 8 days. thaw is up 72%. Those are the kind of percentages we're used to from typical moves in an alt season, and this one was even better. It did 82% in 7 days. And those are the kind of things that are real exclamation points. Altcoins can still do what they used to be able to do, and that gives confidence and hope that we might actually be kicking off an alt season when stuff like that happens. Sure, we broke down thaw in detail on our crypto channel because I'm looking at thaw again right now. I first checked it out in 2024. I explained it all back then. Here's the chart. Now we have to watch how Bitcoin moves, how the big altcoins move. There are some interesting people behind it. It's an interesting project. Anyone can look it up on CoinMarketCap to see what's behind it. Yeah? We covered it in detail on our crypto channel, and it's a good example that altcoins can still do it, and that's something we can look forward to.
It kind of sounds like you're trying to go to bat for the altcoins here. Let's look at the roadmap where the altcoins are listed too, or at least the direction it could go from here with the current setup. And what have you changed on the roadmap lately, besides the date?
Right, you took it right out of my mouth. The date, of course. What I also changed is I've actually marked gold and silver in green now.
Yeah.
I'm assuming, like we said weeks ago, the all-time high in gold has been hit, and in silver too. The max Fibonacci extension in gold was just slightly exceeded. So up top with the big US indexes, there's really just one thing to say. We're in a correction right now, like we've said a bunch of times. If you've been following us here, you're mostly in US stocks, and you've gone off what we said in our first blog and in the interviews, you've generally been in good hands. And that first line on Bitcoin was pretty on point too. Right now we're saying, okay, the higher low didn't happen. We're watching for where the lower low is, heading into a relief rally, and we'll see how far it runs. What's interesting down here, and I just want to hit this quickly, is the altcoin space. Slowly that alt and the green behind alt is starting to mean something, basically like we just said. Yeah, Ethereum and XRP have put up solid performance, beaten Bitcoin over the last 2 weeks, and a few other alts have also started to move a bit, kind of reminding you of the old hype phases. So yeah, something could definitely be happening there. And as for our model portfolio, we moved from plus 120% last week to 143% this week. That's exactly those 20% we just saw in Bitcoin, Ethereum, and XRP. One more quick line on relief rallies and continuation rallies. I still think it's a low probability, but it's there that we could move into a continuation rally. Broadening wedge, I've already gone over that a bunch of times. If we do get a continuation rally and hit that target, I still see those price targets for the altcoins.
Yeah, but not with a relief rally.
Exactly. If it's just, in quotes, a relief rally, like I said on our channel, then I'm assuming these altcoins will at least revisit their old all-time highs. That's the kind of performance I think they can pull off, that they can achieve in the slipstream of a Bitcoin relief rally.
Your optimism on crypto, OR, we summed it all up again on an extra slide. If you had to kind of boil the whole interview down in quotes, there's clearly a lot more optimism again, especially around crypto. How can you see that, other than the fact Bitcoin printed 8 green candles?
Yeah, me being positive, that's kind of a running theme in our interviews. But what I'm seeing right now...
You're pure sunshine.
What I'm noticing right now is the mood in our crypto market is starting to flip a little more to the positive. And I heard a pretty interesting line in that interview with Mark Yusko. He's the founder and CEO of a big asset manager. He always says really, really interesting stuff. He says, real investors, not traders or gamblers, accumulate when the current price is below fair value. Kind of logical, like I buy it cheaper, wait till it's fair, and then sell again. And right now, there are a few ways to estimate Bitcoin's fair value. There's the power law method, for example, which says fair value for Bitcoin right now is around $90,000. I'm not going to get into how that's calculated, but let's just roll with it. And if you look at it right now, we're at 73 and fair value is 90. So real investors are basically accumulating, just buying more, knowing we'll hit fair value at some point, and then it'll go a bit above, and then it gets overpriced on the upside again. Then the gamblers jump in, hedge funds jump in, and so on. And then everyone bails again. That's exactly what people are seeing in the market right now. Like I said earlier, real investors are coming in and buying Bitcoin, ES, XAP, because the price is currently under fair value. Second thing, you can pin the positive case on, and anyone can figure this out. Bitcoin's basically totally unfazed by the Iran conflict. We saw gold, with the conflict kicking off, start correcting out of that wedge. With Bitcoin, it was the exact opposite. It went sideways, slightly up, and Bitcoin, like I said, is waiting for that risk on push, which could come from the US government with more liquidity, or maybe from the Fed with a surprise rate cut, or some unexpected hint from Jerome Powell tomorrow after the meeting at the press conference. Yeah, there are signs they're thinking that way now, and you might even be looking at a rate cut. And what also pushes this whole thing into the positive, of course, is when big names like Ethereum send a signal to all the altcoins. Like, look, I can do 10% in a day while Bitcoin does 1.5%, maybe just 2%. And a few coins are showing that classic hype pattern. So if you add it all up, you really get the feeling things are slowly turning more positive. And if you're on the different platforms, you kind of see it confirmed. You're reading more and more positive posts now than you did 3 or 4 weeks ago, when basically everything was negative. So yeah, I'm feeling pretty good that we can keep riding this positive wave.
Oliver will keep riding this wave next Tuesday. Thanks a lot for today for the background info, the charts and the tips. And to our viewers, hope you enjoyed it too and that you'll be back with us for the surf party next Tuesday.